See, this is why I'm cautious right now. And it's the same reason I was cautious around this time last year. If you've been following me for a while, you know I'm not someone who panics every time the market pulls back. But when conditions start to line up in a certain way, you have to pay attention. See, right now, I've seen a lot of similarities to what we saw before the last major downturn. Now, last year around this time, I turned bearish before the broader market really felt it. Not because of headlines, but because of what the data and the market structure were telling us. That call helped me to protect my capital and avoid seeing a lot of unnecessary, unrealized losses. And today, I'm seeing familiar warning signs again. Now, let me be clear. This doesn't mean everything is about to go crash tomorrow. But markets don't turn on a dime. They roll over when pressure builds quietly. Right now, these are a few things that I'm watching for. You have AI potentially not producing the type of returns investors want to see, while hyperscalers continue to spend massive amounts of their free cash flow. Some companies are even taking on debt to invest back into the company. We also have a fragile US job market. We have weak participation in certain sectors, specifically technology, and increased volatility in leadership stocks. And when you start to look at the risk to reward for the market going higher, it's not looking good right now. It's very hard to justify the market going higher right now before we get some downside. Now, instead of talking in generalities, I want to show you exactly what I'm seeing. I just posted a full market breakdown within Money Mind community and where I walk through key levels, market structure, where risk is building, and how I'm positioning personally. And the most important thing, market rotation. So let's walk through it together.
Hey, welcome everyone to Money Man Resources, a place where, we take a look at the market and I share with you the stuff that I'm doing to help everyone else become a successful investor. So for today, we're going to take a look at the overall market. So we look at the major indexes, the SPY, QQQ. I believe we're going down in certain areas, what certain areas are doing well. So we'll take a look at that. Software stocks, well, SaaS is dead. So we got to take a look at some of valuable companies within the space, Microsoft and some cybersecurity companies. I will also share my winners and my losers and trade that I'm in right now. And what am I going to do next? What's the next move over the next 2 to 3 months? And once we got the time, we'll take a look at crypto, maybe a China play and some other stuff. So with that being said, I am not a financial advisor. Everything I share here is just for educational purpose. Do your own research. However, what I'm doing here is just sharing my notes so that if you see something that lines up with something you're looking at, you may be able to execute on it and take advantage of it. So I just want to make sure that's clear. For today, y'all know Love Me Bar Chart, got affiliate membership with them. I'll probably drop that link in the description, but if you're looking for a place for technical analysis, fundamental analysis, just being able to do research, getting valuable um, resources, they have a really good plethora of information out here on bar chart on their YouTube. So make sure you check out bar chart, man. I really love bar chart. I think me showing what I do with bar chart might help you also. So let's look at the Qs. Qs is the Nasdaq, represents tech. And shout out to Mike Monroe because he's the one that kind of put this on my attention. The fact that the Qs actually topped out since October of last year, and now it's struggling to break against a high of six 620 637. That was the last high that it made, 637. We're struggling to break out on that. So as of right now, I think for the first half of the year, we've seen a full rotation out of tech, especially with the software companies that were just getting demolished, right? But if we were to put on the 50-day moving average, so we have the black line that's a 200, and then the 50. Um, right now, it's looking like it's setting up to go retest that 50 weekly moving average. We go to the daily. You see on the daily, it's below, and it's looking to potentially drop to about that 200-day moving average. So it's something we want to keep an eye on. Tech sector has shown a bit more weakness. We could kind of see that here compared to SPY. Look where SPY has, SPY is not the same. SPY actually made its high in previous week of 697. So SPY is actually doing better. So when you see that type of when you see that type of difference with SPY and the Qs, it may be a sign that we are having what we call a sector rotation. In the investment world, people say, oh, it's rotated, rotated, rotating. But this is one of the times where you could see it clearly rotating. Like if you were to go to bar charts sectors, you're going to see from a year-to-date perspective, energy is up 19%, consumer staples up 14%, materials is up 12%, industrials is up 11%. Now, in and then technology is down 3%, and consumer discretionary is down almost 3% also. So in the investing world, what does that tell you? What does this tell? It tells you that investors are more looking for defensive stocks as opposed to growth stocks. There's a lot of uncertainty. You have a lot of valuation concerns. You have a lot of geopolitical concerns. So right now, beginning of the year, investors have decided that they are going to go defensive because if rates are anticipated to get cut throughout the year, they're looking for high dividend yield. Uh, it looks like the stock market is trying to move away from the AI play, at least for the short term. And to combine that, we can also look here on Trading Academy when usually our market tops, and I'm not calling for a massive crash or anything like that, but obviously the market goes highs and it has to come back down. But normally our market tops is when you have basic materials, energy, and staples doing the outperformance. And literally the energy, consumer staples, and materials is doing the outperformance near market tops. So this is where you could see a lot of the market starting to get the reason why the market's starting to get defensive. And if you're part of the Money Man community, make sure that you join. But with the Money Man community, I shared this on the first Wednesday of February that the ISM indicators, some of the things that we're looking at for the American economy, just started to go into expansion. So if you're looking at the blue portion of this, you're going to notice that if it's going into the economy is expanding, it lines up why basic materials, energy staples, and then potentially healthcare will start getting a run. So that's how we're looking at market, where we see in the market rotation. We could go right into Microsoft, my baby. So full transparency, I posted that I bought shares in Microsoft on the last decline. Shared the prices, these zones here, the green bars is where I'm looking to buy. I just started another position. I just got another set of shares of Microsoft. But if I'm looking at this, me personally, Microsoft on the weekly below, it's 50-day moving average, definitely way below on the daily. So we have that crossover, which is the death cross. On the 50 crosses the 200 on the daily. So from what I can see, I thought this area here would be a nice buying opportunity. Obviously, I think it could go lower to about 365, but Microsoft at this 200 weekly at 375 is also a great opportunity. But right now, it looks like, there's a potential for it to go lower. And if it goes lower, then we'll have to update our pricing. But as of right now, because of the way I believe Microsoft is a great long-term opportunity. We basically bought here near the 400s. We'll wait to see what goes on because right now it has stolen off quite significantly. We could turn on RSI. It has sold off quite significantly, right? We're in deep, massive on the oversold territory on the daily, on the weekly, we're also there. So I would expect some kind of bounce, whether it's a dead cat bounce or an actual reversal. We'll have to wait to see. But yeah, that's what I'm looking at right now. So Microsoft can obviously get lower, but as of right now, this is what I'm really looking for. It was respecting this down channel here, flush through it. And if you know me, if you've been following me, once you break through these downward channels, you're pretty much trying to find your bottom, right? You're trying to find some support here, and where we could get a potential reversal. So the other ones that I was looking at was, I think I have it here, Zscaler. This is another one where I started long-term buying for Zscaler. Take off some of this here. But what we have here is the Zscaler. Delete this, right? So when I'm starting this up, Zscaler has to respect this lows, right? It cannot get past this lows. So if it gets past this lows, then we're looking at really a lot lower prices right now. Now, what's not good is Zscaler is below its weekly 200 moving average. So we'll have to see how it performs this week or over the next week or two. See what happens here on the 50. And you have that death cross also. So it could keep falling. It's not really looking good right now. You got averages moving downwards. Let's look at RSI. Right. So on the monthly, you have an RSI that's dipping, volume increasing on the selling. So I don't I it doesn't look like Zscaler is done. So I started a position. I was like, okay, at 200, it's worth a try. Down here at 165, I thought it was worth a try, but I think I'm gonna have to wait to see if we break down further because this is like the line in the sand for me right here at 155. So once we get below 155 and we close below there, I'm looking at much lower prices to average down on my position. Right, but in the interim, I think we are oversold quite a bit, so I would expect some type of relief in the stock. So it's something I'll be looking at very closely. If I do a retracement from this to the lows. So in order for me to get bullish again, I think I need to see a climb over 196 for me to get really bullish. And then super bullish is if we get a close over 204 and we fill this gap. Because once we start filling this gap, then we're going to test these moving averages. And once we really need to get over this high of 229 to get back fully bullish. We're far from that. We're at 165. So it's going to take a while. If it does reverse, but as of right now, it's not looking good for tech. I'm being honest. I don't see it looking good for tech right now, especially with all this AI themes. Anthropic could come up with something, where they're like, "Oh, we don't need cybersecurity stocks," and I could see this going higher. So we could see the relief maybe to about 188, 196, and potentially back down, going even lower. Um, Palo Alto Network. This one is in a really good position. Also looking like it wants to go hit the 200 moving average on the weekly. So I might be looking to open a new position there also. But because we're seeing so much weakness, I want to be very, yeah. So the 200, I will be bullish here, to be honest. You just want to be very careful because you don't want to keep catching a falling knife. So you want to spread out your buys quite a lot when you're in these type of situations. And then CrowdStrike's interesting because I think CrowdStrike actually has the most downfall to go. And I feel like if CrowdStrike's going lower, the rest will go lower. So maybe about 279, I'm looking at CrowdStrike. I know I have these buy targets here. I started a position here at the 400s. I might ignore the 360 and then just continue to look at, 330 down to 280 will be what I'm potentially looking at. So if you really want to know when I decide to pull the trigger, because with technical analysis, you got to keep monitoring, right? If you really want to know, you got to join the community. The full members get everything. I tell them what I'm doing, when I'm doing it, right? So that's pretty much it there for SPY software. All right, let's go straight into the winners and losers. For me, one of my losers right now is Neo. I was trying to have a diversification. Full transparency, Neo is one of my smallest positions. I made it very clear to everyone it's a high risk, high reward type situation right now. But Neo on the weekly is below its 50-day moving average. We got a little pickup beginning of this year, but it's still down. And but right now you could see we're kind of getting this crossover, hopefully to the upside. We'll have to see. We have a gap down here, but I'll be honest. I really think Neo is about to go to $2, and I'm in some options in it for 2028. So I don't have shares actually. So I'm willing to ride this one out. I don't care. It was down 70%. Now I'm like close to break even, but I'm planning to ride this one out. I want to see how this one plays out. I think it's going to capitulate down to the downside to about the $2 mark. It's probably going to even take out this low. And then afterwards, second half of the year, we'll see what happens with Neo. Another one of my losers, which is another, like, I think these positions are less than 1% of my entire portfolio. So I believe great. So that's why I'm like, okay, let's just start the position. But I remember it's not like I meant to say you are yeah. So Snap started making new lower lows last week, and I thought this was gonna come with a CEO change announcement, but it's just making newer lows. It had good earnings, it popped, and then we're back down. But this is one I'm willing to hold on for at least the next 2 years. Right now, it's not looking good. But from a winner's perspective, energy shared this last time, started some positions in energy last year. It was just based on the fact that everyone kept talking about, this AI build, it needs power, it needs energy, we need more energy, we need more energy. So I'm like, okay, so what's the best place to put a small bet to kind of play this whole XLE energy ETF? Right now, I think I'm up like 168% on those contracts. So I'm looking to see if we could get closer to that 155, 156 area where I could take profit. But that did play into the rotation that we're seeing in the beginning of the year. So doing pretty good on that one. The next one that I'm up in is Generac. Shared this within the full members. Generac right now about at 169. It's up at one. Right now it's up at 181. They have earnings, so I may buy a put to hedge my position to the downside. But right now I like how it's looking from a technical perspective. A lot of those data centers with the extreme cold and extreme heat, whether you're looking at potentially being those data centers have to get backed up by diesel power generators, and Generac is one of those. And going into the summer with the hot heat, we're looking at potential hurricanes being formed. So right now, from a daily perspective, you see the 50 crossing over on the 200. That's a very bullish sign. That's why I think if the stock sells off, it could probably pull back here to that 160 range, come back to support, and then go off. So that's what I'm looking at right now. But Generac right now is doing pretty well for myself. And that's a couple of my winners. We have more positions to get into later this year. So I'll share that within the community. So what I'm doing next, the ones that I'm really looking at for long-term shares and for long-term investments will be Amazon. That's available within the community. We know where we're looking at for Amazon. Amazon getting back down to that 198 area, down to 194, and then even the 200 moving average might be a play. It's a 50. Yeah, because it's under its 50, we could be looking at the 200 as a potential target. And we have Meta. Meta, we got a really good positioning on that when it came down here to that buy point down in the 580s. It went up after earnings, and now it gave back a lot of that gains from earnings here when it popped to give back those gains. So we're gonna keep a close eye on Meta because Meta may be moving down to the lower targets that we had printed out. And then want to also look at the semiconductors. I'm actually bearish semiconductors for the first half of the year. I'm in AMD. I'm looking to get in positions in NVIDIA, Broadcom, but I have a lot. I expect the expectation right now is for semiconductors to get sold off during the months of February and March. So I'm very bearish on semiconductors in the short term, bullish long term. So for the rest of this year, I'll be looking to add to my positions, right? And finally, we could take a look at crypto. I know crypto is not doing good at all. However, I do think that if anything, we've seen how precious metals, gold and silver has performed. My gut is telling me right now we might see crypto do something finally. Ethereum kind of let me down last year, but now that I'm looking at it, feel like I've seen a head and shoulder. So that's not really looking good, to be honest. But it found support over the 200. Preferably I would have liked to see it touch it. So we'll pay attention to it. But this is looking like a potential head and shoulder now that I'm watching it here. A shoulder, and let's go lines. And as you see cleaner here. So yeah, you could see head and shoulder that has been formed, that has broken through, right? And take this, put this here. Yeah, so we're looking at potential more downside movement. But my guesstimate would have been by May, April and May is when we're going to see the reversal for crypto to the upside. But that's just because it's, midterm election year and Trump's party is like so pro crypto. So that's where the expected bullishness is coming from. Nothing else. There's no real catalyst right now that we could kind of look at to kind of get a better gauge. So put this and then it's a 50. Yeah, so it's looking bearish. It's not looking good for crypto. I thought we could get some kind of good news on that, but not really. If we put Ethereum on here, Ethereum, same thing. It's below its weekly 200 moving average, which is never a good sign. Well, outside the Bollingers, on the weekly, on the daily. Yeah, so I would think we will still have some downside to go with Ethereum, 1600 to about 1500 for Ethereum. So it's not that much great news. I think MicroStrategy might be the only thing that, and even that's below. So yeah, man, crypto's not looking good right now. I actually stopped dollar cost late last year because Ethereum didn't break out like I thought it would. So I'm like, you know what? We're gonna get a bunch of lower prices. Let me just chill out for a bit. Let's go templates. Here we go. So here's the outside. I would see these bands curl back up. Still have potential more downside. We might just come here and touch the 200 monthly average for MicroStrategy, but I'm not going to chase this. I'm just going to wait to see if we get more confirmation. So I would say that's pretty much about it. Right now, these are some of the opportunities that I'm looking at. I'm very a more, I would like to say I try to pick my positions and size up on them as opposed to covering a million different tickers and stocks. I've only started one trade this year, which was Generac. The rest I've been in since last year. And I'm only going to be picking here or there. And I'm just looking to accumulate more shares for companies that are on massive discounts, just being a part of the whole tech sell-off, SaaS sell-off, try to take advantage of valuable companies within that space. So hopefully that helps. Hopefully it provides some kind of clarification as to what's really going on in the markets. SPY is doing way better as we could see due to just market rotation into defensive sectors, and those sectors are doing pretty well. So, you know, make sure you join Money Mind Resources, join the Patreon today. We have a free tier, but the full members get everything. They get all the moves when they happen in real time. So I hope this helps and hope everyone has a great trading week, or I hope to see everyone soon again.
You don't need to be bearish forever. You just need to be prepared when conditions change. Now, I'm not here to scare anyone out of the market. That's not what I'm trying to do. I'm here to help you think clearly when emotions start to creep in. If this breakdown helped you, hit like, please subscribe, and let me know your thoughts in the comments. And if you want deeper breakdowns, real-time positioning, and risk management discussions, that's exactly what we do inside Money Mind Resources. Link will be in the description. Now, right now, stay sharp, protect your money, and opportunity always comes after patience.